All right, let's take a look at this. So yesterday morning, if you notice, look in the chat at 8:19, I posted 5,800 whole number will be the breakdown. The target of 5,800 breakdown, I posted right after that at 57.32 was the major low that the target would be. So if you noticed, the target missed by a half of or 2 ticks. My target came down and it went to 32.5. So I drew these levels in yesterday. This is what's called a major gap in the market. We had a major gap all the way down. Now how I came up with these levels, and I drew this in yesterday also, is I look at previous market profile. So we know we have our daily profiles that we're looking at now. But what you can do is you can look at the previous market profiles, because that's where all the trading participants are, and you can find targets. So we broke down. There's a big gap here at 58.40, and yesterday here's my big gap that I typed in the room. If we break 5,800, our target's all the way down to 32, and we missed the low for the whole trading day by 2 ticks. So what you want to do when you get back inside of these profiles or outside these profiles, you can use the previous profiles to find targets. And what I like to do is I like to see where they overlap, because we use a 2 to 4 hour rotating profile. I like to see where they overlap. When they overlap, we have major confluence. This level at 5,800 overlapped, and so did 57.32. So that's 57.32 is going to be a major breakdown in the market. If we ever break that level, this market could be in some serious trouble. So today, we're going to look at these levels from yesterday as targets when news comes out. This high value is a very important level to watch for. If we come up on a retracement and recover some of those losses. So if we do recover some of those losses, we'll look for this level. Put that across. And that is 58.03. So we have a lot of upside that it could run into. We do have minor resistance at 69, where the control was yesterday. But the major level is going to be 58.0250. All right. So that's how we come up with targets. We can see that our daily targets, once we break out of those, that was yesterday, 5,800. It rolled down pretty hard. You can see if we break down 57.47 today, our target's 32 again. And then look at this big upside target. Then we have a big gap. All right, if you noticed, the market's been into a move up this morning. We've been it's been holding structure. We got about 4 minutes to non-farm payrolls. Structure's been holding. This is called a sweet spot V bottom here, and a sweet spot V bottom here, and a normal V bottom. So the trend's been up. If you notice, we've been up pretty much all morning. We can take a look at our major chart. So we've been green all the way up. Our dual trend filter has been green. You'll notice green. So you'll notice this is our best V bottom that we're going to get in the trading room. This is what's called a zero turn candle turn, when you get a yellow candle that forms, a trigger candle or entry candle that forms on the first candle. So right now we're into a mode of, that's a V bottom, that's Momo 1, that's Momo 2. So if we get into a Momo 3, we could go parabolic on this move and recover some of this loss yesterday, because we got this big gap. The market should move up to 58.02 3/4. So we will wait until 3 minutes after the news event, and then we'll start looking for setups. Once that happens, 3 minutes after the news event, start looking for, start stalking setups. We can start taking some trades. We'll watch this dual trend filter and see if it lines up with taking V bottoms or V tops. And then the best trade you have on a V bottom V top is what's called a sweet spot trade, as long as these structured outs hold on a pullback and they don't close by more than 2 closes. This one stopped almost right to the tick here this morning. This one violated it by a little bit, but didn't close below it. So it still was a nice pull in. So we'll see if that can, what happens after we get a news coming out at non-farm payrolls. Remember, go to forexfactory.com. It's free of charge. And what you want to do, you can print out the news weekly, and the news weekly will tell you exactly what the major news events are. You want to look for the red impact numbers against the USD. Go over to the filter to the right under forexfactory.com. Use a little funnel or tornado looking emblem. Click red impact. Click against the USD. Hit apply. You're going to get every single red impact number that we want to stay away from and not be long or short. Wait for 3 minutes after the news, and then we're going to go look immediately for our dual trend filter to kick in. Turn red, red, or green, green. We have two major trend filters that gets on the right side of the market. And then we're going to look for right away V bottom, V tops, Momo 1s, Momo 2s, etc. So we got 1 minute. Let's see what our long-term trend filter will do as of going into the session. Yesterday it was down all morning. You can see it's nothing but shorts. We had a short day all day yesterday, nothing but shorts. We'll see how this progresses right when news comes out. And if this lines up, we got ultimate alignment. All right, so we got a big gap in the market. We called the big gap yesterday, missed it by 2 ticks of low on the whole trading session. Called the exact breakdown. It was beautiful. Let's see if we can do it again today. If we get above 57.63 and a quarter, we should go up to 58.03 and a half. If we start breaking down, 47 and a half. Our first target is 32 and 3/4, and then the market should get cracked pretty hard to the downside again, and we'll see if the trend filter will help us with that. All right, so let's. I'm going to pop off here, wait for 3 minutes after the news, and let's go to work.